All right, so the CFTC report did not come out on Friday. Doesn't mean we cannot analyze the markets. We're going to look through the technical chart and we're still going to look through the economic data to determine what direction the market is actually heading and what direction the big traders may likely be focused on, even though we do not have the CFTC's report. The report is coming out in a day or two, that is on Monday, depending on when you'll be watching this video. But if it comes out, we're also still going to do another analysis based on those changes they made in their trades. I mean, their trades is part of the reason why the price moves also. But the price really moves because economic data changed and geopolitical situation changed. They are only placing trades based on those situations too. So should you. Now, without further ado, let's head into the real data of the market today and see what we can get out of it.
Now, as always, this is not financial advice. This is just me running you through my opinion and why I think that opinion is very, very valuable. So without further ado, let's just head right into it.
So like I said, the CFTC report is coming out tomorrow. You can see it right here, CFTC, and this is for Monday, 22nd of June. But before then, what did the market do economically, like through its economic data, right? What happened in the market? This is where the dashboard comes in. Now, I'm focused on the fundamental aspects and the current technical direction of the market in the recent week, right? Now, this one on the right, the table on the right shows us the total aggregate score for the week, what happened throughout the entire week. I filtered for the fundamental data for the changes on the scoreboard. This is just a way to track if the scoreboard is beginning to tell us the truth or is beginning to deviate from what is happening in reality in the market. But also, it's more like an aggregate of what's been happening in recent times and what's the changes that occurred. Now we have the Australian dollar, US dollar starting the whole thing, and it is currently slightly bearish by market reasonings due to the calculator, right? This is personal things. We have low impact data. We have bearish technical dynamics direction, right? We have an okay, should I call it mere 14 days release. There's been nothing new, so there's no catalyst to the recent data. There's no making it worse or making it better. It's just flat line. But we have positive yield data, meaning you put your money in the Australian dollar, you will still make up like more money than you do that in the US dollar, in the US economy, right? The central bank difference still relies more better for the Australian dollar also. But the leverage fund, which was the previous leverage fund, was more into the US dollar than the Australian dollar. And the retail traders were the opposite, so we had to sell this market if we want to move. But in the recent 1 week, the total score accumulated by the system is a positive of 6%, meaning this was around, let's say, a week before, this would have been around 30-something%, and it has gained value. That is what this total score for the week is saying when it comes to the sun product. However, the economic score, which is supposed to be down here, pardon me, so this is just the economic score alone, showing us what's happening within just the economy on its own. So the economic score also has, I can make it better like this. This is nice. Let's just make this small. Yeah. So the economic score, this is just looking at only economic data, right? The economic score says that this market is somewhat neutral in its position view, right? It's somewhat neutral because it's neutral but still quite bearish, right? Still going towards the bearish side, but the impact data is more bearish and the recent 40 days is flat and the yield is a little bit positive. Now I did a little bit of change on the chart. On the chart here, I added an indicator. Now the indicator, what this indicator does, it brings up all the major data that has to do with GDP, CPI, unemployment, and consumer confidence, and gives me bearish and bullish for each of them. So now on the go, I can see the economic situation and I can also see the technical chart. However, this is without knowing the COT report. All right, this is bypassing the entire COT report and the yield situation and central bank rates situation. So here I can see what is happening fundamentally, and where the way it works is we expect money to flow where the fundamental data is better. That is the way money actually flows in the first place. So this is what we expect. Now let's head into the market and do the analysis. So for the forthcoming week, right, we have bearish data, unless we have Australian dollar news coming out with more positive information, or the US coming out with very terrible information. You can see how far away the GDP growth is, and that is something that is not going to be easily met. Same thing with the CPI, though the unemployment rate is where the what is it called, the Australian dollar can kind of gain some sort of capacity to stand again against the US dollar. Same thing with the consumer confidence. They're already standing real good in the consumer confidence. If their unemployment rate data comes out anytime soon and comes out good, we can then start to see something like back and forth move on the charts. But until then, this market is majorly bearish to me. Also on the chart, I also have another indicator that simply tells me, gives me the order blocks and the break of structures on the market, depending on the pivot points I set. So I have a personal set of pivot points down to 8. So it calculates 8 candles before it knows that is a pivot point, and that is where it should be looking out for a BOS. I could reduce it to something like 5 if I choose to, right? We can reduce it to 5 and it becomes more frequent, easily more frequent. You won't notice it on the higher time frame, you will notice it more on the lower time frame. But all of that is just a later thing. Now, what do I see on this chart? So personally, I see something that I kind of like. This chart is neatly going to the downside, as you can see. Is a neat downsliding chart, meaning right now you should be looking for reasons to sell in levels such as this. This is like the 0.708 levels. If price should return into this zone, it's a possible sell, but this is not like a strong one for me. The stronger one for me is actually behind this whole situation right here. This is a stronger one for me. So for me, this is where I hope to sell at 0.714 levels, 0.714, 0.712 levels. Should price be able to return to this upside, return back up to the upside for me, like come into this space, I would be looking to sell. But I won't just sell just like that, right? We'll still go down to the 4 hours and wait for, good situations, a break of structure to the downside, and then that gives us a reason to put ourselves into this market for a selling situation. If that happens, then we can sell this market for me. So moving on, we move on to the next market. We have the euro against the US dollar. This is one that everybody must have been waiting for to an extent. So the compiled stance is slightly bearish, and everybody knows why this market is bearish. As you can see, this is the market where, in fact, it is the market where all the data literally aligns to the downside. We have bearish high impact, we have bearish technical direction, we have bearish 14-day situation, meaning, in fact, the recent 14-day situation has started to print more and more to the downside. We have bearish yield, we have bearish central bank data, we have bearish leverage funds, which was the last one. I'm feeling the latest one, when it comes out, it might be even worse. And we have bearish retail stance, meaning I should be going selling against the retail traders. So this is one market where the uniformity is absolutely beautiful, the euro stance. However, when you look at the changes on the dashboard, we have a 0.08% gain on the dashboard, and this may be coming from any part of this data, absolutely not the technical data for a fact, but it's definitely coming from probably the 14 days or the high impact data or the central bank rate or the yield. But it's coming, I believe it's coming from the high impact data and the 14 days data, because we've had like lots and lots of news last week. With all of that, we have a situation where shorting the euro US dollar is inevitable. It is the best thing you can be doing right now, and this is not somebody else will be doing it. It's the best thing anybody can be doing right now. Now, then we have the next guy. Before we move on, let's see the chart for the euro US dollar, and what you can see right here is, even on the 1 hour, it looks so scary, and you can see my what is it called, my data here is showing me the exact same thing for the economic stance of the market. It is absolutely bearish. Everything is falling more in place for the dollar than it is for the euro. And looking at this chart has one of the most wicked down structure you would ever see. Like this move is so clean. We have the lower lows and lower highs. So obvious, so clear. Any pullback into the zone may lead to further lower low. It may lead to further lower lows if we see that this week. But again, it also all depends on economic data. So once the economic data starts coming out and I start seeing bullish, this plan to short around anywhere up here becomes shaky, because that can lead to something like this. It can lead to something like this instead, you know. It can lead to something like this instead. You have to be careful. But general, all in all, what's the current stance as of now? The current stance as of now is, well, I can see this bearish order block, this bearish supply zone slash order block worked real hard, worked fine. Meaning this is not a fresh zone. This is not really all too fresh because it's coming out of somewhere. The fresh one I have is this. This is the freshest one in here. Absolutely beautiful and strong. So this, not too sure, but there's a chance it will work. We're waiting for price to return to these zones, this level. And when price returns into such level, we're just going to be waiting for one thing, right? One thing. We're waiting for the usual pull into it and shows of break of structure to the downside. And if possible, I could get my economic data strength, my economic strength telling me, sorry, my currency strength divergence telling me this market is a market where it's beginning to lean more to the dollar side, and then I would love to sell in this market. But that is all, again, it's all dependent on should I have those signals and the economic data remains heavily bearish to one side. Next, we have the British pound against the US dollar. Now, compound stance says slightly bearish. Matter of fact, this is already almost in the extreme bearish territory. In fact, it's already getting towards the full bearish territory. Though, surprisingly, we have good yield data. Should I call it positive yield data? More like data that is saying the British pound is still stronger to work with in terms of yield. However, apart from that stance, every other thing is bearish, except the leverage fund traders who have more sentiments towards the British pound and the dollar as of last week. That can also change with the coming of data tomorrow. But with all of this, what we see is it's a selling market, right? The economic stance has, unlike the rest, which says neutral, this one says slightly bearish. But this is where the whole thing gets absolutely crazy. The British pound US dollar got the most change in my dashboard last week when it comes to major data, major market. It had extreme negative compiled score change, about 10% drop. So it was around 46% and drops to 36. And the economic data also dropped heavily to negative 1.5, dropped by negative 5.17, making it a market where the selling is absolutely obvious. Absolutely obvious. So if we move to the British pound against the US dollar, you can see that it's similar with the euro against the US dollar. However, it's the degree to which this one happened was stronger than the degree to which the euro against the US dollar happened. That is just what it's trying to say. So what am I looking out for? Well, I have a break of structure to the downside on the daily. What I'm looking for is, well, return of price towards the supply zones at the upside, which is the 1.34 to 1.33 levels. If price should make its way back towards these zones, make its way back towards this zone, I will be looking for any change of character to the downside, supported by economic data, and we'll sell. We'll sell the market if that still remains the situation at that point in time when price finds its way up here. That is it for the British pound against the US dollar. We have the New Zealand dollar against the US dollar. The next market on the scale. Well, the sum product is also negative. It is way below 40% already. It is at 38.99%, which is 39, which is still below 40. But it has unlike the rest, it has a slightly okay high impact data, right? The data, the economic data, is towards the neutral stance right now. The recent 14 days data is slowly tugging towards the negative side, which is towards the dollar side. The technical data is sinking down to the dollar side. We have the central bank rates. You should be buying the dollar against this guy, including the yield is surprisingly not so good for the for shorting this market, right? The yield is not so good shorting this market, but fundamentally, right? Fundamentally, the yield is not so good, but when you look at it against the central bank rate is saying a totally different thing here. The US dollar has a better central bank rate as of now. The leverage fund as of before were more in tune to the dollar than the New Zealand dollar, than the Kiwi. Well, the recent changes we have here is about negative 1.67% throughout the whole week, and that's like a very small change to the downside, meaning this market was already negative before and still going slowly negative compared to the rest. The economic data similar was okay and still moving towards the downside. You can see right here is a neutral economic data as it stands down here, which is neutrality. It's coming from, again, the high impact data, the 14 days, and the yield. So let's see what it looks like on the chart, right? So we have the New Zealand dollar on the chart, and yes, we have very similar looking chart with the rest of them. Now this is a chart where the chances to short this market was far more slimmer than the chances for the euro and British pound against the dollar. Far more slimmer. You can see we only had one single candle come into this zone, and then poof, it instantly had that drop. But the drop is not like the British pound or the US dollar, the euro. As you can see, we still have this bullish, or rather supply demand zone here, compared to the British pound, where those zones have been completely nullified. As you can see right here, this zone has been removed due to the pull to the downside, and this zone also was completely passed through when it comes to the euro. But in the New Zealand dollar, that zone seems like it has much more, it still holds a small weight to an extent. Now for me personally, I don't see this zone holding up much. Matter of fact, what I see is that this zone would only have the ability to push price up at most up to this level right here. So this is the most, I think, personally, I think this could push. For now, this is the most I think it pushed to the 0.599, 0.592 levels. This is the most I think any push from here can exist to. The most probable direction it can stop at is already utilized, which is this one, though it was utilized by this single Monday candle. And you can see that utilization was literally something that anybody, right? Anybody would not catch, except if you're trading with a smaller time frame, right? If you're using supply and demand, you would not catch it here. This is where we will be catching this trade down here. And if you've done that, well, you should be doing something like a 1 to 1, 1 to 2, 1 to 1.5, around 1.5 right now. You can see this is about 1.5. The maximum it has been is a 1 to 1.78. That's the max we have gotten out of this trade in the first place. You can see it's not such a big gain, but it's not a bad loss either. It's trading, and that's how trading works. But I wouldn't have caught this. To be honest, I wouldn't have caught this. I didn't even catch it because when I saw price coming into the space, I didn't even pay attention much, and I just let it run. Let it go do its stuff. So this is it for the New Zealand dollar against the US dollar. The only thing I expect this week is they may, as you can see the economic data right here, if we have any news comes out for any of all these categories and any of these flips into any other direction. For example, if the CPI, the inflation data comes out and suddenly flips bearish, we will have an instant, and when I say an instant push through this guy. If the unemployment rate comes out and then suddenly it turns bullish, we would have a run up towards this angle. If the consumer confidence comes up and becomes bearish, we have a shoot to the downside. So you can see buy is a 50-50 kind of thing right now. We're simply just sitting down waiting when will one of these things change? Once one of them have a slight change to one side, market runs up in the other in the necessary direction. Moving on, we have the US dollar against the Canadian dollar. Matter of fact, the next three things are bullish markets because the US dollar is now the base currency. So for the US dollar against the Canadian dollar, we have a 63% stance. This is the most bullish among all of them by my calculation stance, right? And why it says this is like so bullish is because when you look at the data, it doesn't have the best high impact data, but it has the best high impact 14 days data, meaning the changes happening here is better than the rest other two. The changes to the positive side is okay, it's real good, and it's affecting the high impact better. And then when you add up to the fact that the yield is 50%, basically 50-50, very similar for both of them. And the rate, the central bank rate is more towards the dollar than the Canadian dollar. If you then look at the fact that the leverage fund traders and the retail traders are moving in a very good way that will make this trade absolutely stand out for you, buying the US dollar CAD is a very, very great situation. That is for the compound stance. Looking at the economic data, you can see it. We have a very similar situation here, though it's not clearly bullish, but it's slightly bullish. It's neutral, but going towards the bullish side. If you look at the changes in the recent days, yes, the changes is a little bit negative in the compound stance. This is majorly going to be coming from the fact that we had some small news data regarding the 14 days data that is not so strong anymore. But when you look at the economic data is actually becoming more and more positive at 2.72% gain. Now, with all of these views in mind, when you look at the chart, right, when you look at the chart of the US dollar CAD, I'm not in this market, and it's a very simple reason. Just by looking at this chart, there was zero buying opportunity. There has been zero buying opportunity since the beginning of May. This market has been running. Let's put it up on the monthly. I want you to look at it in the monthly. From May till date, this is running almost 2 months now. This market has been to the upside, strongly to the upside. Now, what does that mean? This means that on the monthly, I have this very clear view for where price is most likely going to slow down where it gets to up here. This is the monthly order block that we have. And with this monthly order block of basically supply zone, this is obviously a supply zone and an order block. From this area right here, price may finally slow down, and give us a little bit of pullback. If the market remains this good, you can see how good the market is. If it remains this good or begins to regain this good data, the next thing we're going to see is a major monthly push to the upside, like heavy push to the upside. This is what I kind of see on the monthly factors, and this could happen within the next 2, 3, 4 months. But I can't hold a trade for all those time frames. So let's go down to the time frame where we can't do some kind of work on our own. Now, like I said, this market gave us no chance to come in. You can see it's not tagged into my monitoring market because this market gave me no chance to come in. There is no chance for me to come in based on my strategy. Maybe scalpers, they've seen like the most beautiful chance to come into this market. Because trust me, on the 5 minutes of this chart, you will be absolutely beautiful with the run. It's been beautiful for anybody trading on those smaller time frame like the 5 minutes, the 15 minutes, and if they've just been buying and setting their stop loss at a very good distance, it's been the best buying market you would put your fingers into. Even on the 1 hour, it's been a beautiful market to just be buying into. You just keep buying and buying, putting your stop loss below every last low, every last clear low. You just keep going up. As you can see, it's not even taking out clear lows. And this is because you can see my VOS is coming up. It's because I turned it down. If I take it back to where it's supposed to belong, it's supposed to be at 10 actually. I'm the one who take it down to 8. But at 10, what you notice is it becomes difficult for the system. Oh, it's loading up, sorry. It becomes difficult for the system to find bearish break of structure. Just give it a little bit of time, it's going to load up. So you can see at 10, it becomes very, very few on the 1 hour. Extremely few break of structure to the downside on the 1 hour that you can sell with. And then if you're on the 4 hours, there is no break of structure to the downside that you can come into it. You can see I don't have any break of structure to the downside that I could say, oh, finally, this is where I can trade into, because I mostly come into markets on the 4 hours. For the 1 hour, there were small chances, but those chances were not they were not even returned to the good side. You can see this is a break of structure to the downside, which is like, oh, finally a good place to come into the market. However, I can't trade the 1 hour if I don't have a daily zone close to that level. And as you can see right here, the daily zones are just standing on its own with very, very minimal returns, very, very minimal pullback into it. So this market is the market I cannot trade for now because it's running so hard against us, or rather for us, but so hard that we cannot catch up. The next market we have is the US dollar Swiss franc. This is another market that has been crazily to the upside. You have its good impact data, good, no new 14 days data anyway. It's been flatline for the 14 days, but extremely good technical data. Quite flatline yield, but really great central bank differences. I mean, the central bank of Switzerland has always been quite flat in their rates. And then the leverage traders are standing good. Going against the retail traders is a buy market. In the recent days, you can see it's the least moved market when it comes to the entire 1 week calculation. It didn't even move much. The economic data even went a little bit slower, but it didn't move much. So let's see what that looks like on the chart. So on the chart, you can see this market is running up. I even placed a trade hoping for it to come back into a reasonable direction for me, but you can see this trade is left hanging. I would close this trade when the market opens because this is like dangerous for me to just leave it there. But you can see the market has been seriously pulling to the upside over here. You can just draw a trend line and you see that strong continuous move to the upside in recent times ever since this year. It started this year with a pump and then suddenly dropped, but ever since then it's been a major pump to the upside overall. Now even surpassing the start of the year, the year opening mark is finally above it again with a very small percentage, but it's positive. This market is a market where I want to come into. I really would love to come into. And where do I look to come into this market? Well, I missed the only opportunity I had, which was down here. This was the opportunity that was existing before to come into this market. Oops, sorry, I want to make it this is better. And it was so slim, just like the New Zealand dollar. It was so slim that when it pumped up, you can see how aggressive it went out of range entirely. It went totally out of range. Even if you had bought at this point, you'll just be up a little bit, but it's moved way too fast. Way too fast. That move was unexpected, absolutely crazy. I was expecting the market to pull back into better regions for me, like regions such as this one right here. Even though the market has utilized the demand zone before, I was looking out for regions like this, and I'll tell you why I'm looking out for regions like this. So this is why I was looking out for regions like this. When price made that first move to the upside and broke above this high right here, when price broke above this high, price left us with a very clear structural liquidity or inducement. As you can see, this area here has one of the best almost equal highs here. This 1 hour, on 1 hour here, we have almost equal highs between 7 o'clock and 9 o'clock. So my expectation was since price has made its way above this high, making a good BOS to the upside, I was seeing the pullback, right? I saw this pullback and I felt, okay, price is finally going to do something like this for us to finally buy into these markets and take profit, make some little bit of cash to the upside. But the market moved in my direction, but not as low as I wanted it to come. I'm still patient. If it does come down here, there is still a tendency that may happen. There's this a small tendency. I also have another zone right here, which is this one up here, waiting for it in the 0.079 to 0.078 levels. The price should, fall down to these areas. I may also have another chance. And another area that is currently building up real strong is up here. This is another break of structure to the upside. And that is like a very small one. As you can see, we have another zone coming up right here, even with this one utilized already. This is not so fresh, but this is another zone where I'm looking. If price should pull back into this zone this week, I'm still going to sit on the 1 hour for this market. Since this market loves to run away so fast, right? We're just going to sit on the 1 hour and hope the economic data remains in favor of the dollar, and we can finally buy into these markets, hoping for small profits. Moving on to the next market, we have the US dollar Japanese yen, and you already know my stance on this market. I've been on the same stance for a long time now. It's a avoid this market situation. As you can see, I personally just avoid this market for one simple reason. The BOJ can be very dangerous with this market. Very, very dangerous. Now let's take a good look at it. Every economic data here is above 40 against, except the leverage fund. The economic data itself is literally the only thing screaming slightly bullish here. And in the recent 14 days, in the recent 1 week, sorry, the total score changes by my calculator, both for the economic side and the compile side, is positive. Matter of fact, more positive economic data, basically by more strength for the US dollar. And all of this compiles together to say buying the US dollar against the Japanese yen is a good situation. It is a good situation. It has always been a good situation for weeks now. But this is the problem. And it's the same problem I say over and over and over again. I'm going to go up to the monthly. And you can see that this parallel zone here, the 160 mark, 160, 161 mark, this is somewhere that the BOJ has publicly said over and over again. They do not like the value of the dollar to the yen in that zone. They feel it is too expensive. And each time price has found its way getting close to that place, we see heavy decline. You can see heavy decline, getting close to that zone, heavy declines, getting close to that zone again, heavy declines. And we've counted it 6 times in a row. It has happened in the past. 6 times it has happened. Yes, pressure can make them finally decide to allow it to run upwards. But I will not be touching this market personally because of one simple reason. The BOJ can jump in any day and make this miracle happen again. They've made it happen multiple times, 6 times in a row at this point. Anything is possible with the BOJ, even though we are seeing major growth to the upside. I do not want to trade this market yet until we have a clear hands-off situation from the BOJ. Okay, so this is everything we've seen this week. The economic data is now available on our table on the chart right there, meaning I can pick up my phone, and go to TradingView while I'm on the road and working or somewhere or anything. I can easily tell this market is a better market to buy or sell just by looking at my chart, and it's a very, very good plus for me. It's a very good plus for me. But also, I also want to remind you that that doesn't mean that the whole stance just relies on the economic data. Yes, the economic data is a major pusher. Matter of fact, it's 80% the reason why you should be in a trade in the first place. This may not work for like day traders or scalpers much. However, for us swing traders, this is like a huge part of our trading, a huge part of our analysis, and it makes it even better for us. So tell me what you feel. Do you feel like this is going to help? Do you feel like it's too much information? Do you feel like it's not necessary at all for swing traders? If you're a scalper, well, I don't know how to scalp, so I don't know how to think in that direction, but probably this might also help to an extent if you can get it. With all of this, I would like to say thank you for watching. See you guys in the next one. Peace.